Welcome back to Alpha Recap. Thanks for joining us after the close. I'm glad you're here. Quick reminder, if you have questions about anything we cover, you can reach us at stockalpha.ai. Today, we're unpacking a huge energy filing, a headline-grabbing AI safety audit, and a choppy tape with some heavy flows. Let's get into it.
Great to be here. Lots to talk about from today's session. It felt like the market was trying to figure out a few big structural stories all at once.
Markets were closed for the day, and by the time the dust settled, it was a mixed, pretty volatile picture. First up, Chevron formally filed for approval of a project in Argentina with planned spending that came in at $13.8 billion. Then walk us through why that number mattered so much today.
Yeah, that was the headline of the day. I mean, when you step back and look at this, a $13.8 billion upstream filing is the sort of multi-year commitment that shifts how analysts model capital intensity and returns. It's not just a one-year capex line on a spreadsheet. It changes scenario work for the whole sector.
So the big risks there were regulatory timing and commodity sensitivity, right?
Exactly. The near-term items to watch were permit approvals, local regulator comments, and how the company phases spending. If approvals take longer, the internal rate of return assumptions change. If oil or gas prices move, the project economics move too. So analysts will rerun discounted cash flow and IRR scenarios for Chevron, and probably for peers with international upstream exposure.
Wow.
And beyond Chevron, this becomes a benchmark. When a major files something this big, it sets a talking point for capital allocation. Are majors ready to redeploy into big projects again if economics support it? That's the framing investors were parsing today.
Moving on, the AI audit story was loud. 92% of the 16 commercial image models tested could output fake government IDs, and Google was named among vendors whose models produced high-fidelity forgeries. Ben, that read like a regulatory red flag.
Right. This was a clear compliance signal. If regulators push for stricter content moderation or liability rules, platform operators could face much higher moderation costs and operational limits. That would ripple through enterprise customers and health tech players that rely on those platforms.
Hold on, say that again?
What I mean is, platforms might have to invest more in safety controls and slower rollouts. Enterprise buyers, companies using AI for customer service or internal tools, will do more vendor due diligence. And clinical or health AI startups will have to add identity and safety controls before they scale. Analysts are going to start baking higher moderation and compliance spend into margin forecasts for both platform and enterprise AI vendors. There were a few related items that underscored the tension today. An analyst reiterated a buy on a big CRM software company citing AI strategy. A startup launched a 3-week AI vision proof of concept service, and the American Diabetes Association's fund invested in a clinical AI player. Momentum and safety risk simultaneously.
Short reaction.
Right. And the other thing is, this isn't just tech PR anymore. It's a policy problem that can change unit economics.
Let's talk tape action. Mastercard printed a new 52-week low at about $480.27 on an alternate trading system print, and leveraged ETFs showed outsized volume. TZA was up about 1.4% on roughly 209 million shares, and SOXS was down about 1.3% on roughly 324 million shares. That felt like traders repositioning. Ben?
Yeah, this was a flow-driven day. Those leveraged ETFs trade big and can amplify intraday moves. When you get heavy volume in those products, it often means short-term liquidity and technicals are driving equity moves as much as fundamentals. We also saw a handful of big cap names show extreme intraday swings. Some names moved up as much as 188% intraday in small windows, which is a reminder headline-driven or idiosyncratic moves can dominate for a bit.
Not a great day for payments, at least on the technicals.
Traders were actively repositioning exposures tied to small caps and semiconductors, so expect that kind of choppy price action to persist if the heavy flows keep up.
Yeah, that tracks.
On the corporate governance front, Texas Instruments announced a planned CFO transition. Julie Connect was named CFO, and Rafael Lizardi will retire in August of 2026. That's orderly, but investors will be watching for any shift in capital allocation cadence or guidance style under new financial leadership.
Honestly, I was a bit surprised by this one.
It wasn't a shock, but it's one of those corporate events that can change how the story is told. Also, a couple of sell-side shops raised price targets on a major enterprise infrastructure company, citing stronger server demand. That ties back into the broader AI, compute, and cloud infrastructure theme.
Let's switch to healthcare and policy. NAMI warned that new Medicaid work reporting mandates released yesterday could cause coverage losses and destabilize behavioral health access. At the same time, the ADA Fund invested in a clinical AI player focused on diabetes care. There's an interesting push and pull there.
I mean, when you step back and look at this, policy shifts that reduce enrollment or change reimbursement can slow commercialization paths for digital health firms, even as investors put money into promising clinical AI. So firms in chronic care need to watch state-level implementation and CMS guidance closely. The payer environment will determine demand.
Short reaction.
Right. Watch for measurable enrollment impacts and any reimbursement updates, because those will show up in provider revenue flows.
On the industrials and distribution angle, there were a bunch of incremental operational moves. A regional carrier launching same-day truckload service in Northeast Wisconsin, a compressor distributor shortening lead times, and a market projection for a specialty surfactant reaching about $1.45 billion by 2033. Those felt like the quieter, sensible side of corporate activity.
Those items matter. Companies squeezing extra utilization out of logistics or shortening lead times can boost aftermarket revenue and customer stickiness. These are small, steady efficiency levers that compound over time.
Interesting. A quick rapid fire. An energy services company will present at a conference on June 11th. A startup launched a 3-week AI vision proof of concept. A fund reported a tiny public filing purchase. A painting chain appeared on national television. And a nonprofit added board members to expand fintech reach.
The painting company on TV. Nice visibility. None of these are game changers on their own, but event-driven moves and visibility can trigger short windows of volatility or new partnerships.
So, what really stands out here is that across sectors, we're seeing two common threads: rapid AI adoption, paired with rising compliance costs, and concentrated capital commitments in energy, alongside operational optimizations elsewhere.
Right. Momentum for AI products exists, but the cost of doing AI responsibly looks set to rise, and Chevron's filing put capital intensity back on the table. For capital allocation, that's a re-rating lever. Meanwhile, active flows and leveraged ETF volume are making the short-term tape more about liquidity and technicals than fundamentals at times.
Quick checklist. What should listeners watch in the next 24 to 72 hours?
1. Regulatory reaction to the AI audit. Any vendor statements or commitments. 2. Follow-ups on Chevron, permit milestones, or local regulator comments. 3. Any company or analyst comment around the new payments technical levels, like the Mastercard print. 4. Investor notes or calls on the Texas Instruments CFO transition. And 5. State and CMS moves on Medicaid rules that could affect behavioral health access.
Clear takeaways?
Companies are accelerating AI deployments, but analysts will factor in higher moderation and compliance costs. Big, concentrated capital commitments in energy can reshape sector expectations. And in the shorter term, heavy ETF flows and ATS trades are driving choppy price action. So technicals matter alongside fundamentals.
Thanks, Ben. That was really helpful. Lots of moving pieces. Remember, this digest is for informational purposes only. It's not investment advice or a recommendation to buy or sell any security. Analysts note, data suggests, and momentum indicates are the kind of language we use through our coverage today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next close.